this one.
All right, whenever you guys want to start, you are ready.
All right, ready? 3, 2, 1. Welcome to Prime Properties. I'm Michael Morris. Sitting in with me, let's just call it semi-annually, Stacy Plybon. Stacy, how are you?
I'm well, thank you.
Stacy, tell people who you're with.
Okay, I am with Emerge Real Estate.
And it's a little e, right? Because
It's a little e.
You disciplined me earlier in the week because I put the big E. It's little e
You
dash.
keep capitalizing that E, and it's getting a bit frustrating.
Sorry, I guess I'm really good at English.
How
and you're
many
not.
times do I have to tell you? Little e dash big M merge. So Emerge Real Estate, and I'm also Central Ohio Homes and Lifestyle.
And that's on Facebook. So
Facebook.
People should like that and follow that because you're putting a lot of really good information,
Yeah,
including
thank you.
I think you got to it. Business first got it, and then Stacy got it.
I did.
The
I fired
deal
that off.
Reichert buying AD Farrow. I think that was really important because you're keeping people up to date on what's going on, not just in housing.
Not just in housing, but I totally thought that was interesting to know that Reichert, who is a monumental, company here locally, that they're going to buy 80 Faro, which is another major company that we all know and love.
But they're
Bikers.
keeping it here, which means
They
that it's
are.
keeping a Columbus landmark around here. You don't have to worry about somebody coming in, tearing down buildings if you live in that area or you're looking to buy in that area.
There you go.
So I thought that was really
It's
key.
not going to disappear. Yeah.
So tell them again, how do they find that? What is that?
Central Ohio Homes and Lifestyle.com, and also like us on Facebook, please.
And
Come hang
also,
with me.
yes, and Lou Willard is on assignment. So
Yes, he is.
we are rotating guests through today. And today we have Connie Bright from Bright Expectations. Connie, how are you?
Fine, how are you?
I know you're really excited about this because you're excited we're on Facebook Live and you're excited to do radio. And I told you, you know more than we do in regards to taxes, but this is the time that people need to talk about this, right?
Yes, it is. Everybody's getting ready to file those taxes.
How busy are you right now? Like, when does your season really kick off? Do people really, because I like to wait till about the 13th or 14th of April, and then I really like to kick it in gear and get ready. But in your season, where does it really kind of start?
My season actually starts like mid-January. But prior to January, we have to do all our update classes and everything. But for tax preparation, it actually starts mid-January for some of those early filers that will just want to get it in and get it done.
Well, I want to tell you the reason that we have, and again, Stacy knows you really well, and she said this person would be great to talk about it because we were talking about taxes, and especially when it comes to people buying, selling a home. There is no, I want to get into this first. Using somebody to prepare your taxes versus the TurboTax or all the things we see on TV and radio. I saw it in the movie theater the other day, and I thought, perfect time to do my taxes is while I got my hands in these milk duds. But when you see that, you really should have somebody that's on your side doing your taxes, right? Not just plugging it into an internet app.
Yes, I agree, especially if you are a homeowner or you have a small business or something, because TurboTax or any of those online software apps, they're just going to put in what you provide them. So they don't know to ask you additional questions that you might know something that you don't think about when you're actually doing your taxes. And having a professional do it, like myself, I've been doing taxes for 24 plus years, and I've grown a lot of my clients. I've had them for 20 plus years. So I've been able to prepare them for, like, if their child is going to college or if they have a young one that is going to end up going to preschool or daycare, and the deductions that they can take, so they may want to change where they can get additional monies on their paycheck, as well as prepare for what credits they can get for those college, that tuition and stuff, and those daycares.
Mm-hmm.
So.
Now, do you find that when you're doing someone's taxes, you do a lot of the same people over and over again, so you get a feel of what they do for a living and also what they're preparing for, right? That's probably the best way to go.
Mm-hmm.
Because you always need a doctor, you need a lawyer, you need someone to do your taxes.
Yes.
Maybe not in that order. One of the things I was curious about is I see a lot of things online, and if you're on Facebook, no one's ever complaining about anything. Everyone's completely happy. But the thing I'm seeing a lot is people are complaining they're not getting enough money back on their taxes, or they're not, they're donating to causes and it's not making a difference on their taxes. Are you seeing that a lot on your side? In 24 years, I know there's been a lot of changes, but this has got to be one of the years that you've got to explain a lot more things to the consumer.
Yes, this is the biggest change they've had with the tax laws in over 30 years. So I am seeing some refunds going down, but also with the Trump changes that went in, people are getting additional dollars on their paychecks. So with the lower tax rates, you're actually seeing a little bit of an increase on a per pay basis, which is the offset is causing some of those tax refunds to go down a little bit. So they're not seen as big as they were in the past. As for itemizing your taxes, please continue to donate. I'm not going to tell anyone not to donate, even if you don't hit that category where you can increase your Schedule A deductions to get that benefit. That was one of the fears with the new tax law changes, is that people would discontinue donating to these charitable organizations. We don't want that to happen, so.
When you're seeing that though, is it, because I think that's a lot of people are like, oh, I'm not gonna give to charity now because I'm not getting a benefit. You
Right.
are getting a benefit because you're getting more money throughout the year. You're just not
Yes.
getting a bigger refund.
Yes.
I just wanted to, that's, you did say that, but I want to emphasize the fact that a lot of people are thinking they're not getting, they're losing money and they're losing ground. They're not.
They're not losing ground. It's just coming in a different way. Like, since they've increased the standard deductions to $12,000 and $24,000 for married filing joint, you're still getting that deductions. You're just not seeing it individually itemized on your tax return. So, as long as you continue to donate, you're still benefiting all those organizations. So, and then the other misconception is that people have is, well, now I can't itemize. Well, that's not a true statement, because you can still itemize your taxes. You just have to look at both scenarios as to which one's going to benefit you more. All your mortgage interest is still tax deductible. All your donations are still tax deductible. It's just whether or not you exceed that standard deduction threshold. But we've always had a standard deduction in place. It's just higher now.
Yeah. So you mentioned your mortgage insurance, or I'm sorry, your mortgage interest being still tax deductible.
Yes.
Are you seeing anything else that is available for homeowners to utilize in their write-offs?
So their property taxes and everything are still tax deductible as well, but with the new Trump changes, that has put a limitation on it, because now it's combining your property taxes or your real estate taxes with your state and local withholding taxes. So it takes those and adds them all together and says, okay, we're capping this at $10,000 for a deduction. Where it used to be, you could, no matter what your state and local taxes were, you could deduct all of your property taxes.
But it sounds like you'd need somebody like yourself to do it, because TurboTax and Jackson Hewitt, they're not going to explain that to you.
No, they're not going to explain it. You're just going to say, oh, well, you're just going to plug the numbers in. You're going to give them what you have, and they're going to say, okay, here's your refund.
So there's truly a possibility to miss out on some great, write-offs and things like that. You're missing out on it because that program is not going to.
Well, yeah, because especially like I said, the misconception is, oh, now I can no longer deduct any of this. So they're not even taking the steps to enter it, or even try to think if their deductions still meet that threshold to get the above standard deduction.
Well, I know what Stacy would like to talk about, since she sells and buys homes. For home ownership, how does that affect people today? 2019, let's hope we don't run this in 2020 as a rerun. When it's 2019, home ownership, is it advantageous still to buy a home, tax-wise?
I'm not seeing as big of a benefit for just taxes, but home ownership itself it's still advantageous, because you're building equity in that home from the year that you purchase it. Whereas if you're just renting, you're paying someone else's pockets, and you're not getting any benefit out of that. So if you do sell your home down the road, you're going to recoup those benefits from that home ownership by building that equity in your home.
Not only is she an amazing tax preparer, but she is also a major advocate for us real estate agents who
I was going to say, I can see why you brought her on.
Yes.
You're really like, oh, she knows all the answers that sound good for me.
I slipped her a little cash under the table here to talk well about us, but
yeah, I'll have to make sure I record that.
It's already being recorded.
Okay, wait a second. Strike that. Can we edit that out?
So, how did you guys come to meet each other? I mean, did she just do your taxes to begin with, or?
It's really fate. It was magic, and God definitely had a plan. truly, I'm best friends with her daughter, and her daughter is also the reason I got into real estate. Shout out to Thomasina Sanders. She is also a real estate agent. So I actually made the mistake of doing TurboTax myself for a while, and then I got a little coupon for a one Jackson Hewitt. Went to her the following year, and it was night and day. The benefits from utilizing Connie as opposed to TurboTax and Jackson Hewitt, and I am very grateful that she does my taxes now.
Thank you.
And furthermore, now that I'm a real estate agent and running my business, she's done an amazing job of making sure that I'm prepared and that I am itemizing and that I am tracking everything appropriately to get the best benefits for myself, so that I'm not stuck, paying Uncle Sam an amazing amount of money or even being penalized for that.
How far in advance do you need to know? I mean, with Stacy, I'm sure it's 6 to 8 months out, but if somebody's coming to you to really put together their tax preparation, how long do you need to work on one individual's, information?
So it all depends on their tax situation. I do a lot of sole proprietors, which is like small businesses, self-employed individuals.
That's the majority of the people that listen to this are small business or sole proprietor.
Yeah, so it takes a lot longer to complete their tax returns because you're looking for all the possible deductions that they can take as that self-employment business. You're looking at their automobile expenses. Speaking of another benefit for home ownership, there's things that you can deduct business use of home if you operate your small business out of your home.
Mm-hmm.
You can take a portion of your utilities, your repairs and maintenance, any updates that you do to your home. The percentage of that based on the square footage of your home is also tax deductible.
That was something I wanted to ask you about because, again, a lot of people that they're buying homes or they're running business out of their home. How do they determine what is your office, what's office use and what's your house? I mean, you put up a little yard, a little border, or how do you find that?
So
Partition?
per the IRS rules, it's supposed to be exclusive. The space is supposed to be exclusively used for your home office. You'd basically take your usable square footage of your house against the percentage of the actual square footage of the office space that you're using. And then you could also add to that square footage if you have storage for inventory that you carry for your small business. That additional space would be calculated in that square footage as well. Some individuals will use the part of their garage, if let's say they're in the construction business, and they'll store all their inventoried items in that space. You would add that square footage to your total square footage of your office space.
TurboTax won't do that.
Well, that's what I was going to say because when in years past when I used TurboTax and I had my own business, I had to kind of figure out, is it worth taking the home deduction and possibly being, I'm not saying called on it because that's actually what it's being used for. I didn't want to, somebody have to come out and say, well, you're 5 feet off here or there. How does somebody determine that? I mean, they have to come to you and say, this is the square footage that we're using, right?
Yeah, so we have the basic one. You can just take this square footage that's listed on the auditor's page and then measure the room that you're actually using for business or rooms. And then we just calculate that percentage. But yes, they have to give me, as a tax preparer, that square footage. I can get what's on the auditor's page, but I can't determine what you're using space for in your home. You have to provide that to me. The other thing is the actual usage of your home is, because you have your square footage that's on the auditor's page, but there is a benefit which increases the percentage if you actually go through and measure your rooms that are being used, because you wouldn't include hallways and things like that because it's part of your square footage, but it's not.
I always want to do that because, when I'm going to get my coffee up
usage.
and down, I want to use that hallway.
Well,
I'm just kidding. I know you can't do it. But that it's always been something where I've been stuck on that. How much can you get away with? Because again, if you've just got a desk and an area with computers and that kind of thing, that's one thing. I was just always leery, so I never even took that deduction.
Yeah, it's
in
supposed
the
to be
years.
an exclusive area within your home,
Mm-hmm.
preferably a separate room.
Yeah.
So,
So as a real estate agent, I have a desk at the office, at the brokerage office, but I do have a setup set aside, and that is primarily because of the knowledge she gave me prior to know what it is that I'm capable of doing. Cell phone, business phone.
Yes,
cell
you can
phone.
use, as long as you're using your phone for business, you can write off either your entire phone bill or a percentage of your cell phone. You've got mileage. There's a lot of things that, anything that you purchase for that business is usually a tax deduction.
But clothes.
Clothes?
Yeah.
Clothes are a touchy subject because as
She
a
doesn't
real estate professional, you have to dress accordingly to for your profession. But per the IRS regs, street clothes are not tax deductible.
I
They
hate this
are
rule.
supposed to be if it's clothes that are specific to your line of business. You're advertising that business on the clothing that you're wearing.
So my
Yeah.
emerge garb, I could write
Yes.
that off.
Your emerge
But-
stuff that you actually advertising
But
for
my cute
emerge.
dress from Macy's, I can't.
No, you
I
cannot.
got 20 softball teams out there that have our logo on it because my clothes don't count. I mean, I'm not wearing suits and I'm not a doctor.
Michael.
I think we know, if you've seen on Facebook Live, I'm not dressing up for this job.
He doesn't.
But again, that was my workaround, was there has to be a write-off, but that is
Yeah.
still advertising for my business. And
It
I
sure
think
is.
a lot of people, it's kind of like you said, when people don't want to make donations because they don't think they're getting the benefit. There is a
Right.
benefit to sponsoring little league teams or bowling teams or whatever it is,
Sure.
because you have to find additional write-offs, especially now. You've got to find a way to generate, or not generate, but to get more of your money back.
Yes, that's true.
But in your experience, would you say that this is a better way to go, that you're getting more through the year than you're getting on your refund? I always look at it like, if I get a big refund, I made a huge mistake throughout the year. That's the way I look at it personally.
Yeah, the ultimate goal, even for the IRS, is that you try to break even. You either get just a little bit of refund or you owe just a little bit. But they put out, calculators, W-4 calculators out there so that you can get an idea of how many you should be claiming throughout the year so that you can actually bring more home on a day-to-day basis and not get a huge refund.
Yeah. As a single parent for many years, I learned from her about that because I was always very, fundamental in reading those when you were filling out your W-9,
W-4s.
the W-4,
Good
and
thing
then you
she's
get the
here.
W-2. Yeah, I know. She's the one. I mean, that's who I talk to. All right, so when you fill out your W-4, knowing the appropriate write-offs for that, or I'm sorry, the dependents to claim and what numbers to put in, I was always very just cut and dry with it, whereas she was able to further explain that to me, and that was really helpful as well when you need that weekly pay as opposed to that big lump sum at the end of the year because of, as you said, making that mistake. So once again,
It's good
you
that
need a
you're
Connie in your
yeah.
life.
That's kind of a phrase. That's what she should say. That should be on your business card. You need a Connie in your life.
Yeah, I
There you
came
go.
up with
That's a new logo I should put out there.
See, okay, you like that one? I thought I came up with one once, and now I can't remember it. But I was so proud of myself. And Connie Bright would get your taxes done right. I think that's so cheesy, but
That's
What?
not. Don't
You need
ever
a
do
Connie
that.
on
Don't
your-
do that
you
again.
like that one?
We'll go with what I said.
oh my gosh.
Your business now versus where when you first got into it, is it a lot harder to kind of get people to know the independent person is out there, because you don't have the marketing budget that these bigger companies will have, and it seems like just do it all online and it'll be fine. How does somebody survive for 20-some years in this business? Is it just referral based, or there's more entrepreneurship going on right now and everybody's doing the same thing? I'm just going to use the app, right? They should be coming to somebody like you that has that much experience.
Yes.
Heck yeah.
Most of my business is generated strictly word of mouth or referrals. I started off with 20 plus clients when I went out on my own. I now have over 200 as a client base. So
You have to prepare for 200 different people.
yeah,
You must love taxes.
I like it. I mean, I've always been a numbers person, so it was easy for me to get into doing taxes.
Hmm.
So.
Well, I have a question for you, Stacy, that has to do with taxes. So when you are talking to somebody about buying a home, isn't that kind of that thing where you, like that first time buyer's credit that you get, isn't that kind of where you're kind of leading them into this? Or do you just kind of go, don't worry about your taxes, it'll be fine?
I never say that. I always, I always explain to them the same as Connie did in regards to the mortgage, interest, taxes. Also, anything that they, for a first-time buyer, typically they're not purchasing that grandiose, dream home, right? You have to start somewhere, so they're buying that fixer-upper or something of that nature, and you do have to make sure that they understand that any upgrades and things of that nature, I always tell them, save your Home Depot, your Lowe's receipts, your Menards receipts, save all of that, and then I give them Connie's card.
Yeah, so that brings me to another thing. Day-to-day repairs and stuff that you do to your home, typically they're not tax deductible unless you are in a self-employment and using your home as a business. But when you go to sell that home down the road, if you're in the right market and your home increases in value substantially, there's an exclusion today of $250 up to $500K. But if you only paid $50,000 and you turned your home into a $300,000 home, if you don't keep those receipts of all that improvement that you do, you may have to pay capital gains on that money that you now made off of your home. So those major improvements to your home are worth keeping those receipts and setting them aside so that if you do up and sell in the future for, it'd be further down in the future that you now have a higher basis in your home because you increased all the value with those improvements.
Is that still kind of keep in line with, I believe the rule I was always told is keep things for 7 years. Is that still a good timeline, or do you want to keep it for longer?
No, I tell all my tax clients to keep it for 7 years. But like for the individual receipts for your home, I would just store them someplace and just keep them in case you do decide to sell down the road. Mm-hmm. I mean, that could be 10, 15 years, especially if you're in a market where the home's continuing to increase and you could hit that limit. Mm-hmm. Smaller homes, no, you're probably never going to hit that threshold. So,
well, you don't know, because we were talking about the growth last year in 2018. Those people that were getting, the average sale from one year to the next was going up like $5,000 or $6,000 in that area. If you were in that area when the recession hit, that house could have bounced back $25,000, $50,000 because that neighborhood built back up. You would want to. I would have never thought of that. If I was somebody listening to this right now, I would write that on that one thing. Yeah. That and what I said about her new thing for her business card, Stacy. The thing that I said.
I don't even remember it.
Yeah, it'll stick out. As far as when we're looking at taxes now, the best time for somebody, if they are, where everyone gets down to that crunch, where they wait too long, where's the drop dead for you? If somebody called you today and said, hey, I need this done by the 15th, can you even fit them in? You got 200 people already.
I usually try to fit them in, and I try to get everybody done in a timely fashion, but if I start pushing the deadline and I can't get someone in, I mean, even if I get someone, if someone calls me like on April 14th, I will point blank tell them, I'll be happy to do your taxes, but we'll need to file an extension because there's no way I'm going to get it done by the deadline.
Mm-hmm. Oh, that's another thing. Extensions. Can you discuss that really quick? That you can't apply for an extension because there are some people I personally know that are going to need an extension.
Oh, one Michael Morris.
Yeah. Yes.
I had to do it a few years ago, and then I was just like, they'll never find me.
Yeah, anybody can file for an extension for your personal filings as well as your business filings. But a lot of people don't understand filing for an extension is not an extension of payment; it's an extension of time to get your return in. So if you think you're in a situation where you may owe taxes that year, the best thing for you to do is to make an estimated payment with that extension so that you don't get penalized from the IRS for not paying the liability that you owed by April 15th.
Okay, cool. Stacy, do you have anything? Because we're almost out of time this week.
No, I don't have anything. I'm glad you brought up the extension and everything else, but we don't know how to get a hold of you, Connie.
So I'm under on Facebook under Bright Expectations. I'm also in the yellow pages that nobody uses anymore.
Look underneath your computer. The thing holding your monitor will be the yellow pages.
Yes. But I can be reached at 614-620-0826. And I also have an email address as csbright1@aol.com.
All right, cool. Well, that's going to be it. Yes, that's going to be it for this week. I want to thank Connie for coming in.
Yes,
Stacey,
thank you.
you as always for being here, and we will see you next weekend.
Yeah.